from the Money Mantra, and we are back with another Forex education video. I created my channel to help as many people as possible become independent and profitable traders. So if that sounds like you are in the right place at the right time. So welcome or welcome back to my channel. If this is your first time here, make sure that you like this video and subscribe. I post quick videos like this every single week. And I also already have over 400 videos for you to check out and improve your understanding of market structure, candlesticks, entry and exit points. And if you're interested in trading things like gold, I have a bunch of videos on that as well. And today's quick video is going to be a trade breakdown. This is where I review one of the trades that I shared with my trading community. Now, I like to share trades in my community because I think people should be earning and learning at the same time. It motivates them to want to get better so that they can do this on their own. I don't like people being completely reliant on me, but I do like giving them the confidence and opportunities to make money while they figure it out. Now, this particular idea was posted on August 18th, 2025. And it was very simple. This is my usual format. If you've been following me for some time, you know that I like to keep things pretty simple and straightforward because I don't think you need to use all of the complicated jargon, especially when you're dealing with new traders. It can confuse them. So I said gold looks very bearish tonight, and I denoted that with a red circle. Bearish means sell. I would look for market execution sells or sell stop opportunities, and a sell stop is a type of pending order. I gave them some potential TPs, and as always, I encourage everybody to check your charts and cross-reference your own indicators. Check the news because just because somebody posts a trade doesn't mean that you should take it. You should always do it if it makes sense to you and if it makes sense for your account. Now, this trade was posted around 7:30 p.m. on August 18th. So we're going to head over to TradingView. We're going to look at it a little bit more in depth and we're going to see what actually happened. As I go through this analysis, if it makes sense to you, just go ahead and give the video a thumbs up so I know that you are following along. So I'm going to use the calendar feature on my TradingView. And if you don't have this platform, don't worry, you can create an account for free and it does still give you access to a lot of cool features. So I'm going to go to August 18th and it was around 7:30 p.m. So let's go here and we are going to see what happened. So that's this candle here. Now, I'm just going to walk you through the process that I do when I'm entering into my trades. And the first thing that I do is I always mark previous support and resistance. Areas of support and resistance are going to be where you can see the market had a strong reaction. So if you see that the market has come to an area like this and it sold, that's going to be, in my opinion, a key level. If you see the market has come down to an area and it's bought, that's also going to be a key level. Now, the more taps from the candles that you see on that level, that's going to make it even stronger in your analysis. So we're going to look at some lines that I already have on my chart, and you can see where the market has touched it multiple times. If you guys can see that, just go ahead and drop some sevens in the chat. Even though I added these lines more recently, just scrolling back in the past, we can see how the levels are still valid. Now, if you are new, an area of resistance is typically going to be where the market sells, and an area of support is going to be where the market buys. And the reason why you want to mark these out is because the market is always revisiting the same levels over and over again. So after you collect all of your confirmations and you decide whether to buy or sell, you know which areas you should be targeting for your profit and for your stop loss. So these are lines that I already had on my chart because I trade gold pretty often, and we are just going to get through the analysis. So that's the first thing that you want to do. The second thing that I do is I look at the momentum to see which way or which side has the strongest momentum. Now, the way that I determine this, again, to keep it simple, if I see more red candles and the red candles are getting bigger, that's going to be a sell confirmation. Because we have to remember that when we're looking at these candles, these are literally representing what the buyers and sellers are doing. If you see a strong red candle, that means that there were a lot of sellers in the market and they were able to take price from here to here. If we see a strong blue candle, it means that there was a lot of buyers in the market and they were able to push the market from here to here. Now, if you're looking at a series of candles, you'll notice that when the blue candles are losing steam and the red candles are picking up, the power is switching from the buyers to the sellers. And when the red candles are losing steam and the blue candles are picking up, the market is usually switching from sellers to buyers. And I'll just give you a quick example of this so that you can see what I mean. Now, if we were just to look at this quick little section here with these 5 or 6 candles, we can see that we had a strong blue candle, and then we had a strong blue candle, and then we had a weaker blue candle. This lets us know that the buyers were losing their momentum in the market. So we can see the transition of power happening here where we have a weak red candle, and then we can see that the red candles are literally picking up, which further forced the market down. So I want to look at what the most recent candles have been doing and is it giving me a confirmation for the buyers or the sellers. Again, if you're new here, I do like to use a simple tally system to determine if I'm going to buy or sell. And it's by working through the same process and the same questions every single day. So the first question would be, have we set our previous areas of support and resistance? Yes, we have. The next question would be is what side has the stronger momentum? And if we look at what's been happening more recently, we can see that from this point, the buyers have been running out of momentum and the sellers have been picking up. So I'm just going to go ahead and give that point to the sellers. Now, the next question, let me make sure I'm in the right part of the chart as well. This is 6. Let's go to, here we go. So the next question, now that we see that the sellers have picked up momentum, I'm going to come down to my stochastic. If you don't know what the stochastic is, it is an oscillator type of indicator, and it tells you so much information. I have a few different videos on the stochastic on my channel because of all the indicators I've used throughout the last 5 years I've been trading. This is the one that has stuck. So if you don't have it on your chart, you can click the indicators, metrics, and strategies tab, and you can type in stochastic. You want the original stochastic. You don't want any of these other ones. We are going to keep it simple. Now, the questions that you're going to ask yourself are, is the stochastic facing up or down? Which color line is on top? And has the stochastic crossed above 80 or 20, right? So is it facing up or down? Which color line is on top? And is it facing below 80 or above 20? Now, this is important because you'll notice that when the stochastic is facing down and the orange line is on top, and when it's crossed below 80, that's going to be an ideal time to sell. Right? Here's another example where we can see the stochastic is facing down. We can see that the orange line is on top, and we can see that it has crossed below 80. We also get some sells on the market. Now, on the other side, when the stochastic is facing up, when the blue line is on top, and when it has crossed above 20 or this bottom dotted line, that's usually an ideal time to get in for a buy. So let's go through the questions. Is the stochastic facing up or down? We can see that it is facing down. We're going to give a point to the sellers. Is the orange line or blue line on top? Remember when the orange line is on top, that in my analysis is a sell confirmation. Has the stat stochastic crossed below 80? Yes, it has. And it has also crossed below 20, giving another confirmation to the sellers. Now, this is what I like to call grading my trade. And ideally, we want to focus on A plus setups. The A plus setup would be 5 confirmations. A B plus setup would be 4 confirmations. And a C setup would be 3 confirmations. If you've been here, you know I like to say 3 confirmations are good, 4 confirmations are great, and 5 confirmations are fantastic. So now that we have graded our trade, we are going to go ahead and enter for a sell. We're going to set our stop loss above a previous high. So let's go about here, right? I like to go a little bit above the previous high just so I don't get stopped out. And then we're going to go ahead and set our TP at a previous low. And you just always want to make sure that your take profit is higher than your stop loss just because you don't want to have a higher risk than reward. So we're going to see what happened in this trade. We're going to go ahead and hit play. And we can see that although the market did retrace a little bit, it got pretty close to that stop loss, but then it did come down and hit RTP. So that's why it's really nice not to use the exact previous high because a lot of people tend to get wicked out in that area. But if you just go a little bit above, sometimes it'll be really close, but you shouldn't watch your trades. Just literally set it and forget it. So that is how I decide to take my trades. I use a simple grading system. Whichever side has the most confirmation and I get my entry signal, I'm just going to go ahead and take the trade. As Mark Douglas said, just because you set a stop loss doesn't mean that you have accepted the risk. But if you have a process that you can follow and trust and a strong confirmation checklist, then you really have nothing to worry about. So if you learned something today, just go ahead and like this video and subscribe to the channel. I love making content like this. And again, I have so many videos on my channel that are just like this that will help you become an independent and profitable trader. Now, if you go through my channel and you don't see what you're looking for, you can always leave me a comment and I will add your video suggestion to my queue and then you can just look out for it. I also post daily on my community tab, just some of my favorite previous videos that I've made and also just some motivation for people who may be struggling at any point in their journey. And last but not least, if you want to connect with me outside of YouTube, I do post trade ideas on TradingView Weekly. And I also have a trading community where I share multiple ideas throughout the week. But that's really all I have for you guys today. Please like, subscribe, and share the channel. And I'll see you next time, returns.